Thank you very much. Highness, Excellencies, distinguished guests, ladies and gentlemen, thank you very much for the opportunity to address this important conference. Vitol has been supporting the Gulf Intelligence Energy Markets Forum since the beginning, back in 2011, and it's always a pleasure to be able to contribute again. Back when we started, as Christoph already mentioned, we were in an era of very high oil prices. The Arab Spring was just beginning, and nobody really understood what was going to happen. And new sanctions were being imposed on Iran, which was going to curb Iranian access to Iranian barrels in the market. But what a difference a few years has made. Here we are in 2015, and as already discussed this morning, the US has now become the top oil producer, over 12.5 million barrels a day of crude oil and NGLs. OPEC has changed its long-held strategy of price protection to defend instead its market share, losing perhaps $250 billion a year in revenue. Chinese demand growth for oil has dropped from 10% plus per year to less than 5% this year, and potentially as low as 2% next year. Everybody is gearing up for Iran to bring some incremental volumes back to the market. Many of us in the industry know that many of those barrels are already in the market, but as they invest in the upstream, there'll be more to come, and up to 1 million barrels a day if they return to pre-sanctions levels. Iraq is still a big unknown, perhaps staying around 4 million barrels a day for the next year or so, but with the potential to quickly move to 6 million barrels a day in the next 5 years. So this has seen the oil price environment come crashing down to below $60, and now these days, mid-40s. If you look at the forward curve to the end of December 2017, we're still only looking at $60 oil. As was already discussed, many unknowns. So even as a global trading house, we are not keen to try to predict where oil will be. The unknowns include geopolitics in this region in particular, but also in the Caspian. The pace at which Iraq can increase its production and exports. The medium outlook for China's economy. Will it have a hard landing? Will it be a soft landing? Will consumers at an individual level continue to drive cars and invest? There was an unknown, it's becoming a little bit less unknown, around US export policy. There was an announcement a couple of days ago that Obama will probably not support a reversal of long-term US policy, but we'll have to see where that ends up. And of course, OPEC policy, will they blink or will they maintain their policy? But even there, what would be the impact of an OPEC price cut? Production cut? How much would they need to actually cut production to get oil to $80? And as Christoph already mentioned, if OPEC, for instance, and by OPEC, let's face it, we mean Saudi Arabia, cuts production by 2 million barrels a day, how quickly can US shale adjust? It seems to be a sensible policy to retain this market share strategy. The majors and many large state producers have cut CapEx up to 20% in many cases. It will take 5 to 7 years to see the impact of those cuts in the market. And the big question for all of the region's producers is, how long can we hang on to, and how long can we burn through our foreign exchange reserves? On the demand side, almost regardless of what happens in China and India over the next few years, shouldn't have too big an impact on the price. A 5% incremental demand over what is expected today is only 800,000 barrels a day. You would need to see sustained above average growth in India and China to actually hit that supply glut. So if we see ourselves in a sustained low and volatile price environment, what impact is it having? Well, on large exporters, many of them, like Russia, Venezuela, Nigeria, Algeria, and Saudi Arabia, have seen a massive burning of their FX reserves. For those countries, we're talking between 10 and 45% decrease since 2013. It's hard to hang on to that for much more than a few years. For big importers, what's been the change? Well, India and China, in fact, they've benefited greatly from the lower prices. Their foreign reserves are looking very, very healthy indeed. But there doesn't seem to have been any significant increase in demand stimulated by the lower prices yet. This is a much, much longer term trend to see new power plants being built, new downstream petrochemicals being built, more cars being driven. That is a much longer term trend. And then of course you've seen some countries, including the UAE, have taken advantage of the low prices to modify, reduce, or eliminate energy subsidies. And that's a pretty key point. It's a little bit easier to do in times like this than in high-priced environment. So if we're looking at a volatile, low-price, and uncertain environment for the coming years, one of the themes of this conference is, what are the winning strategies? Well, A, it sort of depends on who you are, importer, exporter, or balanced. But B, I think for everybody, one of the lessons we've learned is, the word was mentioned earlier, resilience. Resilience, if we define it as the ability to make the best of any environment, well, how do you create a resilient economy? How do you create a resilient environment? I like the example of Fujairah, where we are today. Fujairah has been blessed with geography, not necessarily with oil. And some of the comments I'm going to make now reflect very positively on some of the decisions that this government has made. Well, one way to become more resilient is to have the right kind or more flexible energy infrastructure to allow the free movement of energy in whatever its form from where it is produced to where it is needed. The second is to further liberalize markets. What does that mean? Well, in one case, we've already mentioned, cut energy subsidies or modify energy subsidies so that they're only targeting the truly needy. Energy subsidies create a false supply-demand balance. Second, and this is a long-term issue, diversify the economy. We can't always be net crude oil exporters. The further downstream the industry moves in this region, and the more non-energy the economy becomes, the more resilient it can become to swings in energy prices. Current example is Oman's interest in going into the plastics business. And then finally, it helps to have more players in the game bearing the risk. If national governments and national treasuries are wholly dependent on oil exports, it's a lot less helpful than if you have multiple players, including the private sector, getting involved in all aspects of the value chain. That way, any shocks to the system, whether price increases or price decreases, are borne out by more players than just one, the Treasury. Reform can be painful in the short term, but in the long term can be beneficial. The changes that are required across the industry, especially in the developing world, may take a generation to implement, but it will leave the next generation in a much stronger position and hopefully much more resilient to meet tomorrow's challenges. Thank you.